Hello friends, here we are taking a look at Ethereum versus USD and Ethereum versus the BTC. Starting off here, taking a look at Ethereum versus the US dollar and what can we see on the charts. And you can see actually quite distinctly that the pricing here of this 236 Fibonacci comes in there at 351 and the current prices here are 351 as well. We're just in touching distance of that with about 50 cents between us and that exact price point there. Movements up above that could spell towards a nice upward side movement, a potential for upward side movement perhaps, with looking up towards the 382 at 377, the 50% at 398, and perhaps even coming up as high as that 420 blaze it zone if you want to see the prices go high and get up towards these targets up here, where there's just overall being a retrace against the downward trend with the potential even for more downward price action thereafter, or indeed perhaps pushing on past those areas towards the top side. But all of that is beyond the scope of necessarily trading this with getting in and out and making a good profit. So that's what we're at right now, kind of asking questions about it, but that does offer up a significant area of resistance for us, no less as indicated by this other magnolia sort of yellow colored line that's coming in right adjacent to it. Scroll out to the left, you can see that's a 50% retracement point in there on this other Fibonacci that we've come down to. So far we've actually come in and already touched in at around about the golden pocket zone, coming in and filling it out with this wick that we saw over there on the 5th of September. But have we managed to do enough to really necessarily recover from that on these time frames? Bearing in mind that we actually don't have divergences, bullish divergences really jumping out at us between this low and the last one, just in terms of this and the bigger, broader picture to really get excited about. And if we go down the time frames, can we see anything else that is contrary to that? You know, for instance, this low here and the previous low on the RSI is not bullishly divergent. Now it is a little bit on the stochastics, and on the stochastics you can see this sort of upward sloping area here, and I'm going to even in fact go as far as to draw in a upward sloping line. In fact, I just remember talking about drawing this over there on Bitcoin, and I recommend you check out the Bitcoin episodes. It's very, very, very good. I actually intended on showing off this how over here there's the potential just here to have a rising wedge, and if we did push on past this area, what are we looking at in terms of the oscillators down below? And I would actually like to point out the fact that there is indeed a rising wedge here on this oscillator. So there you go, there's the benefit from watching more than just one of the episodes on a daily basis, and that is of course could be drawn in on other ones with the potential speculation about whether or not we've broken out of this and moved past it already in terms of the stochastics, and where that would actually leave us if we were to fail to break and close up above this neutral line. That's something that you might want to consider in terms of your technical analysis. Now bearing in mind that these things go hand in hand quite often, with one leading the other, but overall these two lead in the industry of crypto in general altogether, and that is always worth looking at that. So that descending triangle that we can see in the spot prices on the daily time frame on the Bitcoin charts might be of note for us just here. And what do we have in this area right now that we're looking at? Well, this low over here sets you up to kind of ask a couple of different questions about things. If we sort of ignore that area and instead just look to where we are here, a low that comes in and finds support in around about that 330 area, then comes back up and doesn't achieve the highs of this 236 area at the 350s again, would start to look distinctly like a descending triangle as well, perhaps on this 4-hour time frame for Ethereum. But maybe even we could just draw this in over here and kind of take it from, well, actually, what am I doing? You can see as well in previous and historically I already had this box drawn in here, and there's other ways of looking at this as well, like we already spoke about in the previous episodes, such as this potentially being an Adam and this potentially being an Eve, and this would then be in a neckline where you could see drop-offs below it. But what have we got here is a potential third sort of peak on this one, and we've got to wonder about the structure of that. And if we do then push past these zones, then maybe you could get bullish towards a movement towards the top side, bearing in mind then again the dynamic that exists between this Fibonacci line and this zone down here. If you're a subscriber to the episode, which I damn well recommend you should be, you no doubt are fully aware of the fact that movements below this and up towards that, looking at between two Fibonacci points like such as the 618 and the 50%, often signal that you could be moving above a 236 Fibonacci retracement off the back of Fibonacci drawn in from those highs, which obviously coordinates with this 236 here, and that's why there's that line lining up so nicely with the 50% and all of that, offering you that confluence there. So that's why I'm looking at here on this thing. This of course being the 4-hour time frame. You know, looking here at the 24-hour time frame, you're not seeing that bullish divergence or whatever. Over here in the 4-hour time frame, you're not really seeing it either. You're not really, although there is a touch of it here just on the end case, you know, just here with this little upward movement as we've had the prices then kind of go up. But should they fail to do anything overall, that would probably look like a rising wedge, which is of course a bearish pattern in general. So you'd have to bear all of that in mind. Jumping over here towards the Ethereum, Bitcoinerium, Priceriums, then what you're looking at is that we've come back up towards the neckline of our head and shoulders, sort of scuff crap head and shoulders that we have on here, which doesn't actually work in terms of the textbooks, but in terms of psychology, I think you can coordinate with me and agree with me that this is of course a significant area in terms of the pricing in there at 0.034, having come down towards these lows previously at 0.03. Now if we did move down here and actually break down past this 236, which is in there at 0.03352, then we could be looking at a movement down the way towards perhaps one of these other targets, such as the 382 in there at 0.0317, as we've already had, or indeed down towards the 50% in there at 0.02891, or indeed even further down towards this golden pocket area at the around about the 0.0257 to let's call it 2600, 0.026 area. Now if you were to then want to do a measured move like with this as being, bearing in mind that the right hand shoulder is higher, that doesn't really work properly in terms of the head and shoulders pattern. But what I am talking about is just the failure of this in terms of the neckline, the psychological area in there, really, which is the significant sort of zone. You could remove this whole thing and draw an upward sloping line here, which we've broken down below from, and then if you could also put an upward sloping line there. We always talk about confluence and how you can look at things in numerous different ways, and now because I've spoken so many times about not liking that head and shoulders for various different reasons, how about I talk about it in a more textbook and correct manner, right? If I put this up like that instead, going where that neckline was and where we find the prices kind of retesting currently, and I were to then mark in the top side of this thing here and looking at the top, what would you call that? Well, it ascends and it gets wider and it's wedgy, so you call it an ascending broadening wedge, and an ascending broadening wedge is actually a bearish pattern. Now what is not so good about this is that the prior trend and the lead up to it of course was a positive one, and this would be distinct as a continuation pattern, and you'd have hoped to have seen the downward price action before this, in a sense, but that is what that is though in terms of in terms of how you're looking at that structure there. We got a retrace up towards this area, a retest off of that, and a failure down, being rejected by the 21 and the 55. We see also these two things crossing, the 21 and 55, the yellow line and the green line, and potentially more further downside action down below, and that would of course be negative for us in terms of the Ethereum versus Bitcoin pricing. Now it's up to you to decide how you think that would actually play out. Would that mean that Ethereum has got more greater potential downside than Bitcoin? And if it did, is that going to also coincide with a failure of recapturing this lower area here on the pitchfork on the Coinbase charts that I've got drawn in here? And therefore, would we be looking down towards these lower targets, such as 294, where the lower warning line is, and indeed the extension area down below this, down towards 250? And what those things often look like, if you want to see an example of it, is something like this. Pushing down past these areas, then coming down towards this extension and getting between this two zone, and it's a fairly bearish scenario to be facing if that were to be the case as well, where you could potentially have other downside targets thereafter kicking in from a broader type of point of view. For instance, down here towards the 618 in there at 213 episodes. Well, bang, that's a home run. Bear in mind as well that I didn't look at the charts before I started this episode today, and of course it's all been fairly quick. Now I know that I speak a little bit too quickly for some people, but I often get told as well by others that they watch the episode at 2x speed anyway, so there you go. It's also obviously just a case of horses for courses. That's one of those worst rhymes. I like them, by the way. You've heard me saying this joke before if you subscribe for a long time. I like really bad rhymes that people have to use a massive dose of cognitive dissonance to really, work, or just a bad English accent which doesn't pronounce words correctly. No offense to anybody from those parts of England, yourselves. Horses for courses doesn't really rhyme. Horses, unless you say horse like horse or something. I don't know where you're from if that's how you speak. And then, and that's quite like that 1990s Bristol Gravy advert. Save the best for last. And on that bombshell, I'm going to tune out. Thank you so much for tuning in today and watching this along with me. I hope you have some good success in your trading in the near future. Bearing in mind all the levels we spoke about for the price action if we move up above this zone here, above the 360 area, perhaps even with Bitcoin or with Ethereum, you could be looking at moving past this 236 here, which could be quite a positive thing. And maybe you've got targets like 400 and 420 as being your next ones, and then 460 there after that in terms of 10% moves up above it. Thank you so much for tuning in. I will catch you in the next episode.